Hi, everyone. Can you hear me? Great. So it's towards the end of the day, so I hope you guys are full of energy still. 2 more panels before the drinks. Yeah. All right, so here we have 3 people working with Bitcoin storage, and we were just talking before starting this conversation, are we friends or foes? And it's great to see that everybody agrees that, we're all in the same industry, but we're not really competitors. We all want to contribute to the industry becoming better and Bitcoin becoming more secure. I'd like first to ask a question regarding, this morning we heard CoinDesk telling us that the universal players were the ones getting the more financing and kind of putting their fingers into different parts of the industry. So I was wondering how you guys think this might affect you, might affect your strategy, especially when you see companies like Coinbase and Xapo announcing or already having implemented vaults, multi-signature. So how do you react to that, and what are your plans to differentiate yourself in the future?
So I'm James from Elliptic. I think it's important before you try and do everything to make sure you're doing at least one thing well. So for us, that focus at the moment is on storage, and more than that, on enterprise storage. You look at the wide range of customers you could go after, and you could expend all of your efforts just trying to get to everyone without actually building a good product. So we're focusing very much on one thing until we're comfortable with what we're doing, and then we'll look at other products.
Great.
Yeah, Simon from Netagio. I tend to agree with James. I mean, we've been trading for over a year, and we started off doing storage, and we've made a good business out of it. And then a couple of 2 days ago, or yesterday morning, we launched our exchange.
Congratulations.
24/7 continuous trading, British-based exchange between pounds, Bitcoin, and gold. And to be honest, that the fundamentals underneath that is the storage product. When people exchange and they buy Bitcoins, they're buying gold, they want to know that they're storing it with a credible provider, somebody that's built up that reputation. So for me, the storage aspect is just a core part of our business and our platform, and it's there for customers to use as they choose.
Great. Bill?
So Will O'Brien from Bitgo. Bitgo is a Bitcoin security platform. We focus on the enterprise, and we have an enterprise multi-sig, multi-user wallet. That's software as a service. And we also have a platform with an API, so you can build an exchange, a marketplace, securely on Bitcoin. And I think the question is, what is happening as universal players, quote unquote, are getting into different spaces or taking over the whole space. And I think it's a symptom of us being in the very early innings of Bitcoin. In the early innings of the web, everybody verticalized. They built every single piece of the value chain, every single piece of technology. They had their own server hardware, web server software, and so on and so forth. And along the way, there was specialization. So the early days of the web, it wasn't safe to put your credit card number in, and people were building custom solutions, and then you had emerging brands like Trusty and VeriSign and others. And ultimately, those companies made it safe for e-commerce to start and grow. And so our focus is on making Bitcoin safe, securing the world's Bitcoin, and we're starting with the key customers in the enterprise, financial sector. If you're a family office investor or a hedge fund, if you're an e-commerce player, if you're a Bitcoin miner, how do you store Bitcoin securely? Those types of customers should not be building their own security. Somebody who is doing payment processing, I'd say it's kind of an option. You could build your own wallet because you want to have control over the whole code base, or you could work with somebody like Bitgo and leverage the benefit of the broad customer base we have and the learnings and the processes and procedures around security. So I think it's just really, we're in the early innings. People are doing everything, but ultimately those universal companies are going to have to pick where they differentiate and where their business model is. Look across the different companies. Coinbase makes money on trades. Xapo makes money on insurance. We make money on storage and software as a service. So there's different companies. Where they're making money is probably ultimately where they're going to specialize.
Great. Well, actually, I wanted to talk about business models, so it's a great transition. Could you tell a little more about what's your business model, how customers, how much they're willing to pay, and the trust issue? Like, a lot of people before wanted to control everything they did with their Bitcoins. How do you convince them to use your services?
Sure. So Bitgo launched the first multi-sig wallet in the market, web-based multi-sig wallet in August of 2013, and now we've launched Bitgo Enterprise, which is a software as a service, multi-user wallet with spending limits and corporate treasury policies. So the basic wallet was free. It's always been free. It's just multi-sig. Multi-sig means there's 2 of 3 keys that need to sign any transaction. The important thing is how you generate those keys, where you store those keys, and who holds those keys. So we have 3 basic tenets. One is everything's 100% on blockchain. We don't have a pool of funds, no Mt. Gox type of scenario. Number 2 is that we only hold 1 key, so we act as a co-signer and a security layer, but we don't actually hold the funds for the customer. The customer or the customer and a custodian hold those 2 other keys. So if you take an investor or a hedge fund that has $100 million in Bitcoin, they're likely going to work with a traditional financial services custodian to hold that backup key, and they're going to be managing that active second key. Bitgo is going to have a key. So now you have 3 keys split across 3 institutions, which means that it's impossible for an attacker to come into one institution and penetrate and steal the funds. And then the third principle is that we want to make sure that if Bitgo is ever unavailable or has, goes out of business or anything else, that you can get your money back. So the recourse is through that backup key. It means that without Bitgo, you can take those 2 other keys and go sign a transaction on the blockchain using open source software that we've published already. So that's our basic underlying technology. We've added hierarchical deterministic wallets, all sorts of other capabilities. So with that in mind, we then price it as software as a service. So small businesses that need 1 or 2 co-signers are spending hundreds of dollars a month on kind of that basic capabilities, and hedge funds and large holders are spending more on a basis points model. So anywhere up to 30 basis points a year, or 2.5 basis points a month for that service.
Right. Simon?
Well, our business model is much more around the exchange and the trading fees, but as I said, the storage is an absolute key part of that platform. From a retail customer perspective, it's absolutely free. It's always been free to use, and I think it should stay free or very low cost to use as a wallet. We have it. We store the majority of our bitcoins in offline. And we hold them across multiple geographical locations as well, like probably most people do for redundancy purposes. But from an institutional investor's perspective, we do have those customers, but really we're sort of at the moment targeting the retail side and working on building the exchange out.
So our main differentiator really is that for all of our enterprise storage, it's insured. So that comes into our pricing a little bit. We tailor it very much to the specific customer's needs. Generally, people are paying somewhere in the region of 1% per annum. And we're working mostly with funds, some Bitcoin businesses, and so on. And the way we sort of structure it for each of them kind of depends on what they need, because some of them need multi-sig functionality, where they might have a fund administrator or something having to authorize all of their transactions. Some of them want a simpler system where we have most of the control. So we price it a little bit based on what they need.
Sure. And do you have multi-sig? So
yeah, we can do that for some of our customers based on, as I say, if they need their fund administrator to sign off on it.
Sure.
And so on. Yeah.
And maybe to be a little controversial, do you think insurance is still relevant once you apply things like multi-sig?
I think that there's always something that can go wrong. It really depends on what the client is comfortable with. That was certainly something that helped us draw some of the initial clients in, because they were still getting used to Bitcoin, especially funds who are more used to traditional assets, commodities, currencies, and so on. And they weren't really sure how Bitcoin worked. They were more comfortable with the fact that we had insurance.
Okay.
But I think insurance also kind of goes hand in hand with a bit of trust as well. And insurance is difficult. I'm sure you guys can, contribute to that. That insurance is difficult to get. So a different approach that we've taken is to have we're in the process of achieving this, having our cold storage independently audited by a leading accounting and auditing firm, BDO, who are sort of one of the top 6, and they're carrying out a international standard of audit, an ISAE audit, looking at, have we got the funds that we say we have, Have we got access to those funds? Because it's very easy to say, yes, here's the public key and you can go and look it up on the blockchain. But have we actually got access to the funds? Have the right people in the business got access to those funds as well? From a people perspective, but also from an infrastructure perspective, right down into our infrastructure service provider, into their organization, who's got access to our customers' funds. So we're trying to achieve that confidence in our storage in a different manner that doesn't involve insurance, more so because that's quite difficult to achieve. So we're just looking at different ways to ensure customers feel comfortable with storing their funds with us.
Sure. Will, about insurance?
Yeah, I think as the market matures and there's continued professionalization and the larger institutions, the Wall Street, others get into Bitcoin, or some of the funds that are in Bitcoin today, they're going to be looking for insurance because it's part of the way they manage their holdings, they manage their assets in general. And we're already seeing trends similar to that. So one of the key features we built into our enterprise product is auditability by outside auditors. So you can have a Big Four auditor actually look at your holdings that are on blockchain with a view-only account, and they can't spend, they don't have an ability to transact, but they can monitor and see that you actually have the funds that you control. You can have junior accountants who have spending limits who can actually just transact a little bit. So mapping Bitcoin to today's businesses and how we classically run our financial services markets is really important. We can't just go out there and say, hey, every financial institution, go learn how Bitcoin works. So, go take a cryptography class. We have to provide the tools to bridge between what is an amazing instrument, technology, and network to how people operate today, and then we'll see that adoption grow. So insurance, I think, is one of many ways to create that bridge. Sure.
It's interesting, both of you just mentioned the auditing, and I wanted to ask you guys, what do you think are the best practices in terms of auditing?
So I think the best practices are already predefined, right? I think when you look at, let's take a hedge fund that's a customer of ours who's a hedge fund. They have an outside custodian who holds a backup key, and that custodian is not going to transact, but they're going to be able to monitor that the holdings are there. They're going to be able to approve certain trades of certain size, and they're going to be an active party depending on the level of risk. And so they need to see audit trails, transaction histories, monthly statements, all those kind of classic reports. And they also need to be there in case something goes wrong in the hedge fund partnership. If something, trades go the wrong way, they need to be able to have recourse. And by doing those kind of best practices, or bringing in multi-sig, bringing in some of these other real strong capabilities, it actually reduces the risk, reduces the liability, it'll reduce the insurance premiums, it'll bring the market into an approachable place. So we continue to evolve, best practices around tracking and reporting and so on. Also key generation and key storage. It's important that you don't ever have one person who has access to two keys, or that you have one institution that has access to two keys when you're talking about high-level funds. So that's where you can use a custodian or a separate party to hold the backup key. And that means that there's no single point of attack, and there's no way for coercion to happen, or even inside job and any of those other threats.
Simon, you wanted to expand a little bit?
Yeah, I mean, that's why we went down an international, standard audit, because they've been around for years. Everyone, a lot of people are familiar with them. They know what they mean in terms of if you're a consumer of them. If you're dealing with a company that is ISE accredited. Equally, if you're an auditor, there are best practices that have been teased out over many years, in order to create those standards. So. Not really too much to add to that answer. I mean, we're just using a industry standard framework, if you like, that people can understand. There is, however, obviously a learning curve when we took on the auditor as well, because it's a new piece of technology. However, that's around the Bitcoin space, but there are still traditional, can't believe I just used that word, traditional sort of practices around infrastructure that support that technology that they also need to audit, whether it's audit trails or access controls. They're all still applicable, but then you've got this Bitcoin piece on the top.
Yeah, absolutely. I think that all of the existing practices need to be applied. The great thing about Bitcoin is that a lot more of it can be done cheaply, automatically, and we're working on some things, and I think a lot of other people are, about how to automate that, make it more transparent. And I think as more companies move towards accounting and process that is very much focused on Bitcoin, a lot of that becomes easier to do.
Sure. So I'd like to switch gears a little bit because we're supposed to talk about the future of storage. And we all said before the panel, well, we're not sure we know what the future is, but definitely we can take part in shaping that. What do you think the trade-off between security and usability or ease of use, how is that going to evolve? I mean, Premier just before mentioned how he lost his phone and then he had to go through a whole process to recuperate his Bitcoin. So how do you see that balance between ease of use and security evolving in the future?
I think there'll always be different use cases for different things, and you'll definitely need to have accessible stuff when you want to buy a coffee, and you need very secure stuff when you're holding it long term. I do think that the overlap between accessibility and security is going to get better in you can do things with Bitcoin that are more accessible, much more secure than they would have been with other types of finance. So a lot of the practices that are just starting to be discussed and standardized in Bitcoin will become applicable across the whole range of use cases. So even when you're spending money on a coffee, it'll be more secure than it could have been with other types of money.
It was mentioned earlier, I think, in one of the VC panels, mentioning the fact that the sort of the merchant world has already outstripped, if you like, the consumerization or the usability, of Bitcoin. I think it was inviting people to come forward with those initiatives in order to make it easier to use. And and to the point earlier, if you, as an individual consumer, if you decide to store your Bitcoins in one of the most secure ways possible and offline and encrypted and even multi-sig, there's a huge learning curve there. And that sort of contradicts, if you like, what needs to happen with Bitcoin, which is that adoption, make it a lot easier for consumers to use. So there has to be a blend between security and easy for consumers to use. And I think that's where the storage providers sort of sit right there in order to bridge that gap. I mean, we do operate a pooled fund, but a pool of funds, if you like, but that's there so that when customers want to do withdrawals, their funds are always available for them. But this is why we hold the majority offline, but there's always a pool of availability for them to use.
So I think we all agree, and I'll let you answer later, that we all agree that there needs to be a balance. Do you think that the industry as a whole, the storage industry, is doing a good job already, or do you think there's much to improve still in terms of usability versus security?
I think you can always improve on what you're doing, to be honest. No real specifics on that. I think maybe obviously from a mobile perspective, I don't think we've really explored the possibilities of, how do we get around security and mobile and that consumerization. I don't think we're quite there yet. But and then backing it off to your actual offline storage. So
I think.
I think that multi-sig actually solves that trade-off between ease of use and security. Prior to multi-sig, you could have something easy to use like an exchange, pooled funds, or hosted wallet, or you could have something very secure like cold storage. But the moment that you pull that key out of cold storage, it's a threat. Even if you split the keys and put in different geos, the moment all those bits come together, it's a threat. With multi-sig, you can sign a transaction on 2 different devices such that 2 keys are never on the same system and never held by the same person. So there's no single point of attack. And then wrapping on top of that is the service layer. So multi-sig itself is a nice technology, but then that service layer of how you actually interact with the blockchain, it doesn't have to feel like the blockchain. So you log into Bitgo with an email address and password, and then you need to know a passcode when you sign transactions. That's the information you need to transact. It's very much like logging into your bank account online and using your ATM PIN code to transact with an ATM. It's the same kind of paradigm. So those bridges make sense. So I think multi-sig is going to enable a lot of growth in the ease of use without risking the security. And I would also say to your second question that security is an evolution. We can never say we're done. The threats are going to increase as the value increases. A few years ago, Bitcoin wasn't really valuable, so you didn't really need to spend a lot on security. Now it's valuable, now you have large holders, so you need to spend more. But there comes a point where people ask who's Bitgo's biggest competitor, and my answer is that it's DIY. It's running your own, hiring a $300,000 a year security consultant to build your proprietary system and then trying to maintain that. But ultimately that's unsustainable because security is an evolution where you need practices and procedures and policies and people and all these other things that are happening. And that's best done by a specialist in the industry, not done by every single company doing it their own flavor. So we're seeing everybody do their own way right now, but ultimately the storage companies will become more than storage. They'll become security experts. They'll become facilitators of exchanges and transactions and remittance services and everything else, because it will move from storage to custodianship, where custodianship is shared among multiple parties, and that will enable these other use cases that are very exciting for the future.
Great. James, you wanted to add something?
Well, I just think on top of that, as part of the evolution, there will be a lot more standardization. At the moment, as you say, everyone's doing something that they hope is very good as a storage company or a custodian, but it's very hard for a consumer or a company who's looking at who to choose to figure out exactly what everyone's doing. So I think as we evolve as an industry, there'll be more standards put in place and people can be audited or whatever else, and they can say, I'm doing at least this, hopefully more. Yeah.
And so, we talked about vaults, we talked about multi-signatures. What do you think is next for the storage industry?
Well, we added hierarchical deterministic wallets. So one of the key exciting parts about Bitcoin in the very early days was anonymity. I think that was falsely classified as anonymity because, we saw with Silk Road, it's not really anonymous if you ever connect your identity to one transaction. But you do want to maintain privacy. So if you're a hedge fund or a high net worth individual and you're moving large blocks, you don't want anybody to know that you have those blocks or what those addresses are. So HD allows you to generate keychains, and so every transaction is on a new address, and so you're able to maintain privacy. It also opens up a lot of use cases around e-commerce. So every transaction can be in its own address, but those addresses can all roll up into one keychain, which can roll up into one wallet that you can then reconcile your invoices and other things. So there's a lot of, I think HD is to your point, James, about standards. I think the standards of BIP 16, BIP 32, BIP 70, these are really important, and as an industry, we should embrace those and continue to invest into Bitcoin Core and into these standards and find those best practices and then try to get as much adoption as possible across the industry.
Mm-hmm. Simon?
I think there's a lot of automation and structure that can be put in place around spending controls. So at the moment, not much has been done on that. I know you guys have looked at it a little bit, but there's not much standardization in terms of how we can make sure that the right people are allowed to make the payments only up to certain limits and make sure that it's all done on the right time frames. Maybe for some use cases, you don't want people to be able to withdraw within a week or within 2 days and so on, that kind of control.
Simon, did you want to add something?
It's not a huge amount you can add to that. I think really, I second all of those thoughts in terms of what we can do, and yep. I think standardization and ease of use for the consumer. I'm always going to be keen on that, but yeah.
Sure. And Will, I'm glad you mentioned the BIPs. So are there any other BIPs besides the one you mentioned that you think would be useful to our industry, or are there some BIPs that you wish were worked on?
Yeah, that's a good question. Well, I mean, I think those are the three most important right now. It was great to see the floating mining fees. I think that transaction fees. That was a very important addition. The number of transactions per second will become important. If in absence of some kind of solution or thought around that, we'll see more kind of pooled virtual exchanges. So I think to move more things on blockchain is kind of a trend we should focus on this year. 4 months ago, I was saying 2014 is the year of multi-sig. Now I think everyone agrees to some degree that that's very important. But we should also, as an industry, come back and say, how much can we keep on blockchain? There are always going to be use cases where you need to have kind of virtual pools for small cases or real-time transactions or something like that. But it worries me that we still have a substantial portion of the holdings off blockchain, a substantial portion of the transactions off blockchain. The Bitcoin network is the most secure aspect of the entire game here. So let's leverage that, and that's really important. The more we can push on blockchain. So James, to your point, we do. At Bitgo, we have spending limits and approval chains and user roles, but those are all policies that are internal to Bitgo. So we have enterprise-grade security around protecting changes to those policies and how those are changed, but those aren't on the blockchain. Could we have another BIP where spending limits is part of the actual transaction? And you can put that in, so even if you end up transacting outside of Bitgo, that you still adhere to those spending limits. I think those are the type of, as we find new innovations, the more we can push down to the standards and to the BIPs, it's going to be great for the industry.
Simon? You can pass if you want.
Yeah, I'll pass my.
Yeah, for me, it's the spending controls. I think they need to be on the blockchain.
All right. And as you know, I mean, there are some statistics that say that most people hoard Bitcoin and never do anything with it. Obviously, we all wish for more adoption and more use, and merchants embracing it, users paying with Bitcoins. I'd like to know currently, how does the fact that most people hoard affect your business? And more importantly, the fact that this might evolve, and hopefully in the sense that less people will hoard and more people will use Bitcoins, how will that affect your business and maybe your business strategy?
So for us at the moment, being purely storage, it's good that people hoard it and store it, but we don't want that to be the case long term.
Yep.
I mean, we want the industry to grow, and for that to happen, people need to be spending it. But I'm excited about that transition because we're here already, we're talking to our customers, figuring out what they want to do with it, and we can build our future product around that.
Yeah, I mean, we don't charge for the storage. It's a free product for us. So if people want to store with us, that's fine. If they want to use it, as a frequent wallet, then that's fine. I think the general trend that we do see, however, is that people are storing more, if you like, obviously than they're sending out, but by quite a way. There's always transactions coming into storage, and quite far fewer going out.
Well, I think the more investors in Bitcoin, the better. So the more, even if it's hoard mentality, getting buy-in from large financial institutions who are starting to buy up Bitcoin, that's a great wave of support. Tim Draper just buying 30,000 Bitcoins. That could not have turned out better in terms of the auction. It was, I mean, I know there are other people bidding on it, but it was just a great stamp of validation. And so those kind of things are great. So even if there's a little bit of hoarding at this point, I'm not worried. I think Bitcoin will become more useful and will be used in a variety of ways that we can barely imagine. For our business model, we charge by storage and basically holdings under management, or holdings for the customer. So whether you're storing and sitting and holding, or whether you're trading actively, it's not important to us. For our future goals, we have a platform with an API. That's where we're going to see a lot more of the transactional activity. So we want to enable global entrepreneurship around Bitcoin, building an exchange, building a secondhand marketplace in Brazil for secondhand goods, using Bitcoin in escrow accounts and custodial accounts. Those are the kind of things we want to see as the market develops.
One thing we hear in the news very often is, and someone mentioned that, Bitcoin is used for drugs and illicit things. Obviously, it's probably overblown, and it's probably a very tiny minority, but it does exist. And I was wondering how you deal with your KYC policy, know your customers and AML and things like that. We talked about audit earlier, so I'd like to know a little more about your KYC policy.
Cool. Yeah. We KYC all of our customers. We outsource that. We do it to someone who knows how to do it well. And for our current product, it's quite simple to avoid enabling any kind of money laundering, in that we keep all of our customers' funds segregated, and it's just they deposit and then they withdraw. They'll get the same Bitcoins back that they put in, so it's pretty hard to launder money through us.
So Netagio was started within a business that was that is regulated. We then spun off from that business, but when we set the business up, we put in the regulatory sort of the compliance frameworks, and have years of experience of working in a regulated environment and a compliance perspective. And we put all that into when we started the business. So we take our customers through that when they get onboarded. We try and make that the easiest process as possible. And that means that we're doing all the best practices from a compliance perspective than we possibly can. We operate against what's the EU Payment Services Directive as a compliance standard, which is one of the highest ones. And I think the point being that put it in now and obviously continually to monitor the transactions that are happening as well within the business. So we have ongoing alerting and monitoring, so we're seeing what's going on and then can react to that and question things if we need to.
all of our customers go through an enrollment process, and that's very important. We don't facilitate any illicit businesses, and our customers have to comply with applicable laws. We don't actually hold the Bitcoin for our customers. We don't have access to the Bitcoin for our customers. So we're not party to the actual holdings. We're just a security layer and a cosigner. So that gives our customers peace of mind that there's no threat or risk that a government's body can come after Bitgo and actually affect their business. It would be a moment in time setback where they need to transition their Bitcoins to somewhere else, and they would have full recourse to do that without our intervention.
Very good. So do you guys see yourself expanding into altcoins?
So we've looked at altcoins a lot, and we've had some customer requests for it. None of the altcoins have really a big enough market cap right now that it's a worthwhile business venture, but it's something that we'd like to look at, continue to monitor. Same thing with sidechain and some of the other efforts that are coming up. As something grows, then it might be interesting to look at. Right now, as an industry, putting all of our efforts behind Bitcoin and getting the world educated and comfortable, and knowing that Bitcoin is secure and safe, knowing that there are actually practical uses for it, that's a really positive thing that we can do. So to divide up into other, I think if you look at altcoins as kind of experimental labs where you can come up with new ideas and then bring them back to Bitcoin, that's a great model. If you look at altcoins as trying to compete for market share or compete for the energy of the VCs and investors and entrepreneurs and others, then we're kind of spreading our bets, and maybe it's too early to do that.
Yeah, it's same for us. I mean, until the markets in those altcoins, grow quite substantially, and also customers demand it from us more, because we're only going to do what the customers want. Then continually monitor it and look at it. But until that expands, really.
We've not touched anything else yet other than Bitcoin. We've had no demand for it. I think long term, probably for us, more interesting is custodianship of other assets, other blockchain-based assets, rather than other currencies.
So you're all security, storage-oriented companies. Of course, you aim at having the best security possible, but as you know, it's quasi-impossible to have something that's entirely bulletproof. And probably if you guys tell me it's fully bulletproof, I'm not sure I would totally believe it. So I was wondering, but I'm sure you guys do a great job at being as safe as possible. So I was wondering what possibly can keep you up at night in terms of what could happen, what could go wrong.
I don't think anyone wants to talk about the best attack vectors, particularly, but we're constantly reviewing our security procedures and currently going through some penetration testing, so getting outside experts in to try and break it. I think what a lot of people, especially in tech world, do is fall in love with the technology and think that that's the answer to everything, and then forget about the edges. And the human element is often the best way to break a system. So when we think about our security procedures, we try and think of it all the way from the beginning to the end, rather than just what we're excited about, the technology in the middle.
Yeah, security keeps us up. Security as a whole keeps us awake at night. One thing we've also done is implemented a bug bounty program, which has been really successful. Rewarding people for exploring any potential risks to the platform. And that's been great, because it's people have come forward and said you should perhaps look at this and look at that. And, we most of these things we have on our list of when we classify it, whether it's a high risk or medium risk or a low risk. Obviously, it's a high risk and it's in the pipeline to be fixed as soon as possible. But that's been really successful from a security perspective. We do regular pen testing as well. We always have done for since last year. And just trying to follow all those best practices from a security side. But yeah, I think it is the security. It is obviously the security side around what the assets that you're storing, for customers.
We take a proactive approach, thinking that there are two prongs to this approach. One is we assume that every system can be compromised. So my co-founder, CTO Mike Belshi, he was at Google. He was on one of the first guys on the Google Chrome team. And just in the data that they collected and evaluating building a new browser is evident that 30% of computers are infected with malware. So, okay, you assume every desktop can be penetrated, then server attacks and DDoS and all these other attacks can happen on the server side. So how do you then build a system where a single attack can't take down the system or a single attack can't steal the Bitcoins? And so we always frame it in that lens and say, what are the vectors, or what are the layers of protection that we need to add to protect against specific threats? The second prong is really about engaging the community and engaging our customers and security experts. So we originally wrote a white paper about multi-sig, socialized that with the Bitcoin core group and Gavin and Mike Hearn and others. We've open sourced part of our stack so that people can independently audit the JavaScript that generates the keys for the client. We have a bug bounty program. We've done external security audits. And so the combination, it's just all of these in combination. Your job's never done. You have to keep building, keep layering on. And so as we grow in holdings secured with Bitgo, from tens of millions to hundreds of millions to billions, we're just going to have to keep layering it on. We recently, in our last financing, we brought the former CEO of VeriSign, Stratton Sklavos, onto the board and on as an investor. And the lessons that VeriSign learned are incredibly applicable here. The early days of securing the web was kind of an easy job, and compared to at the end of the day with the vaults and keys and key ceremonies and all these things that they had to do. So we're prepared for that. We're building those processes. We already have some of the best industry processes, and that's, I think, what's going to give us and give our customers peace of mind.
Great. Well, at this point, I'd like to open it to the public. Please, when you ask a question, introduce yourself briefly and shoot your question. I think we'll get you a microphone if you hang on a second.
Hello. Yeah, so my name's Dennison Bertram. I'm a founder of the company Eternum Cryptographic, and what we're doing is we're making personal cold storage tokens that allow you to store your Bitcoin on its own. One of the things I think maybe the conference itself sort of focuses on is the idea of these applications for storage of Bitcoin and working with Bitcoin on an institutional level. What is your thoughts regarding individuals' ability to store their Bitcoin in the future? I mean, currently a lot of people suggest things like paper wallets, but certainly when you think of in the future of perhaps storing $1 million on something like a laser printed piece of paper, you have to think that there's a better solution for individuals who are not looking for an institutional relationship to store their Bitcoin. So I was interested in what your thoughts on that would be.
You go to bitgo.com, there's a free multi-sig wallet that you can use to store your Bitcoin. When you want to start adding layers, if you move from an individual to, say, a high net worth individual who has an attorney or some outside kind of custodian of other assets they hold, then you can move to a very small paid plan, which allows you to have somebody else involved in auditing or monitoring or approving those transactions and scale up from there. So we're focused on the enterprise where we do have a consumer available product. I think if you're going to have $100 of Bitcoin, there's a lot of great solutions out there, blockchain, Coinbase, Circle, and so forth. I think when you do scale up in wealth, then you want to go store it securely. I think if you were storing a piece of art or a baseball card or gold or any of these other assets that out there that have value, you would make a decision whether you're going to take custodianship yourself or whether you're going to pay a custodian to take care of it for you. And so as it gets bigger in wealth, you're not going to have everything in your basement. You're going to start to use outside custodianship. The nice thing about Bitcoin is you can actually still have control over that custodianship while leveraging a service like Bitgo to secure it for you.
Yeah, I think the solutions available to consumers will continue to improve, as will the ones for enterprise. And there will always be some people who want to do it entirely themselves, or they want to have full control over it. And then there are others who just want a great solution that is provided by someone else. They don't have to worry about it. If they die, they know it goes on to their next of kin, that sort of thing. So the solutions need to be tailored to different categories of customers.
And actually, following up on that question, I wanted to ask you guys, I mean, you're mostly doing institutional at this point. Do you think there is room for hardware devices in whatever you have? Is that in your plans?
Yeah, that's something we're very actively working on at the moment. Again, I think it will depend on the type of customer and exactly what sort of access to storage they want, that trade-off between security and accessibility. But yeah, that's how security is done well.
Sure.
Yeah, I think there's definitely room for hard-based wallets. Again, if that adds to the ease of use for the customer as well, and it's tailored to a customer solution, then absolutely.
Yeah, HSMs are something that are important to some of our exchange partners, and it's something that hardware security modules. It's something that's just important to evolve the security.
Great. Next question. Okay, well, thank you very much. Thank you to the panelists, and